Hey everyone, welcome back to our monthly Wealth Wisdom podcast series. I'm your host, John Lawson of Asante Wealth Management, Sana Family Office. Our clients ask us for our thoughts on an incredibly wide breadth of subject, but one of the most common subjects is real estate. So today we have Steve Saretsky, who is a Vancouver realtor and author behind one of Vancouver's most popular real estate blogs. Steve is widely considered a thought leader in the industry with regular appearances on BNN, CBC, CKNW, CTV, and a contributor to BC Business Magazine. Steve has built a successful business while working with and providing advisory services to investment advisors, financial institutions, policymakers, and real estate developers. So Steve, thanks so much for joining us. Really appreciate it. Got a number of questions lined up. First being, it seems like this recent surge in Canadian real estate investment is coming from domestically rather than abroad. And you mentioned recently in your blog post that it's manufactured by politicians in Ottawa. Can you explain that, what you mean, and for those that don't know?
Yeah, I think it's just everybody's looking for fingers to point at and who to blame. I mean, I think in 2016, it was pretty obvious that there was a wave of offshore money, particularly from China coming into the housing market here. And obviously that kind of got the party started. So that was pretty easy. I think people demanded a foreign buyer's tax. And so, it was very easy to point the finger and try to blame somebody. But I think today everybody's trying to say, well, who do we blame today, right? You don't have any, immigration or population growth. I think we had the lowest in Canada, the lowest population growth last year since World War I. So that was non-existent with travel. Obviously the Chinese money is not following as a result of that. You've got a weak labor market. We were building a lot of housing supply. So there's really everybody's looking to figure well, who do we blame? And I think unfortunately, I think for the mass public, it's understanding sort of policy measures, monetary policy is a little bit of a complicated topic. So most people just don't get it. And I think if we look at the host of measures that was brought in at the onset of the pandemic or this crisis, is you had OSFI lowering the stability buffer ratio down to 0. So that obviously increases, bank lending capacity. You had CMHC reintroduce a program called the Insured Mortgage Purchase Program, where basically they just buy off mortgages off the bank's balance sheets, again, increasing lending capacity. And then you had the Bank of Canada obviously coming in and engaging in, massive amounts of quantitative easing. Particularly they're running their Bank of Canada mortgage bond purchase program. So basically, long story short, is all these programs were designed to get banks to lend money during this crisis, right? If you have banks starting to tighten credit, we would have had probably a much, much deeper recession. And so the goal, I think, was quite clearly to get money in the hands of people. And the easiest way for banks to do that is to issue residential mortgages. And so if you look at residential mortgage credit growth in Canada, that's actually running at a 10-year high today. So you have banks basically pumping out 10-year highs in residential mortgage credit at a time when, the fundamentals are not great. So clearly there's a mandate, I think, from up top that says you need to get money out the window. And the measures that they brought in place helped the banks to do that.
Great. Okay. Thanks. Good explanation. I laughed a little bit when you said that we're at the lowest population growth since the war. Well, you know what happened after that. We probably see the same thing in terms of a bit of a COVID baby boom coming up in the next year or so. Who knows? We'll see. I know actually around the office here, we've already started to see it. So.
Yeah. No, I know they're obviously trying to fast track immigration right now. They're kind of lowering their quote unquote standards for who they would normally allow into the country for permanent residency and stuff. So I think that they're certainly trying to ramp that up. So yeah, I mean, it's going to be interesting for sure.
So we've seen a ripple effect in Lower Mainland and elsewhere, not so much by downsizers now, but the work anywhere effect driven by COVID. What's your comment on that? Is that something that you see continuing? Has it really had an impact?
Yeah, I mean, the largest price strength or appreciation has been in the suburbs, obviously. So if you look at, the home price index for single family houses in the Fraser Valley, I mean, it's up 20% year over year. That's the strongest pace of growth across any segment of the market. However, I would actually argue that that's kind of a lagging indicator, that home price index. So it's honestly probably closer to 25 to 30% price growth for single family houses, and townhouses aren't far behind that. So that's been the largest driver of growth. And obviously the laggard has been like the downtown condo. I mean, those prices, for 2-bedroom condos, those prices are still down on a year over year basis. And the 1-bedrooms have been, for the most part, pretty flat. But I do think that the hype around work from home, I think is a little bit overblown. I think that looking at the price growth, you're seeing unbelievable price growth in places like Chilliwack and, Bowen Island and the Gulf Islands and stuff like that. And so I just think that a lot of that is unsustainable growth. And I do think that once we go back to more of a normal, I think that you'll see a bit of a reversal, personally.
Interesting. All right. And so the detached market, you touched on this just a little bit with the Vancouver condo market, but houses, townhouses, they've been garnering the most attention of late. What are your thoughts on that lagging condo market? Is that going to catch up, or are we going to see revert to the mean for the detached housing?
I think it's following a similar trajectory as 2015-16, where you started the increases in the single family market. That typically, it's if you look at kind of past Vancouver housing cycles, it tends to be how it kind of plays out. Is that the one segment, the single family segment, always kind of leads the charge. And then, in 2017, we obviously saw that flip where all of a sudden the condos were grossly outpacing the single family market as it topped out. So I actually think that's kind of the early stages of what we're seeing now. I think that the single family market has arguably put in a high, at least in the near term here. And, so we're starting to see a little bit of a slowdown, more sellers more inventory coming to market, some buyer fatigue. And you're actually seeing now is an acceleration in the condo market. So I would argue that I think it's quite plausible that you could see condo outperformance over the next 12 months.
Interesting. And so Vancouver's condo market versus Lower Mainland as a whole?
Yeah, I look at this as more like, when I reference these numbers, I'm usually looking at like Greater Vancouver. So like Lower Mainland kind of as a whole. Again, there's always going to be minor tweaks based on, neighborhood and municipality and stuff like that. But for the most part, on a whole, we do see the condo market accelerating. Even like the 1-bedroom condos downtown, for example, we've seen a lot of the investors are now back into the market. So at the onset of the pandemic, I think a lot of them were selling. They certainly weren't buying. I think there was a lot of fear on the streets. And what we've noticed basically since the announcement of the vaccine, every single month, the condo market downtown has gotten stronger. And it's particularly since January, February, and here into March. I mean, all these 1-bedroom condos under 650,000, every single one of them is going multiple offers. Right. And that's more so that, yes, there's some first-time buyers in the market, but I think a lot of it is just investors kind of scrambling to quote unquote catch the bottom. And I think that the bottom was put in many months ago.
Okay. And so a little bit of what you're saying, and you've alluded to it once again, but it's that age-old question. I'm sure you get a lot of this, but should people even be buying in this market?
I mean, I think that I've certainly cautioned a lot of my clients, if you're looking for a single family house, I think that there's certainly been better times. I mean, I would argue the same for the townhouse market as well. So, I understand that people have a need, particularly for like a single family house, right? The need is, we want to set our roots down and we're going to live here for 10 years. So it's a little bit of a different dynamic, but I do think that if you're buying like a single family house today, again, as I mentioned, in the suburbs, particularly, prices are up, 25, 30%. You're probably, if you're going to buy today, I would say, don't be surprised if you have a 10% pullback within the next 12 months. I just think it's gone too far, too quick, that And I think that, again, we're going to start to see inventory outpace sales. You'll go from a red hot market to a hot market to a balanced market to a buyer's market. But that takes a little bit of time. So that's kind of how I'm talking to my clients. I mean, as investors, I don't think the condo market's moved a whole lot. So I think that there's still, I still think it's a green light to go ahead. I think that you have to have, again, like in this market, you have to always have a long-term outlook. So for the investor, for a condo investor in Greater Vancouver, right? I mean, the reality is cap rates aren't high. I mean, they haven't been for a while. So you're looking at it as a lot of, hey, listen, I'm going to borrow at 2%, which I would argue is probably below the rate of inflation. And, you try to lock that in and just basically collect the rents.
Yeah. Yeah, no, absolutely.
And then, if you get some price appreciation on top, I think that's more of a bonus. But I know everybody likes to speculate on higher prices, but it's hard to say, right? I mean, if you get, if that 5-year mortgage goes from what we had as 1.5 up to say 3%, then I think you'll probably see prices pull back a bit, right?
Yeah, absolutely. And so you touched on two things there. One of them being if buying to use as a rental right now, is it still feasible? And if so, where? So do you see a difference in the Lower Mainland of areas? And so you've said, yes, people really are, and there's good opportunity right now in the condo side anyways. I don't see it much in the housing, but maybe you beg to differ.
Yeah, I mean, I think you're getting better yields, obviously, like further out from the city core, right? I mean, if you go into the Fraser Valley, like you're going to get a slightly higher cap rate, but maybe I don't know if I'd say slightly less stable tenant, likely less price appreciation, in my opinion. It's hard to say. I just think that, like, if you look at where for the new building and the construction is going, like, we don't really build a whole lot of new housing here in like the city of Vancouver. We just have a municipality that refuses to sort of greenlight projects. And the fact is that every single project that launches in the city of Vancouver now is quote unquote luxury. So for example, if you're looking to buy a new construction project downtown, the lowest you're going to buy in today, the lowest price you'll see today and over the past 5 years has been about $1,600 a square foot. So, I mean, the numbers are like, you got to be putting down large sums of money to make those numbers work. And so I think the days of sort of affordable, product in the city of Vancouver as an investor. So I always look at that and say, well, if you can buy a condo downtown that's say 10 years old for $1,000 a square foot, that's arguably much better value than a new construction at 1,600. But I do think so. We're just not building a whole lot in the city. And I think most of that construction, if you look at it's happening in, Surrey, Langley, Abbotsford, parts of Burnaby. That's kind of where we're seeing most of the new construction. So you'll have more supply to compete with. But I do think you also have the benefit of more and more people moving to these locations just out of necessity.
Yes, absolutely. And do you see lots of construction? I know as I drive around, specifically Fraser Valley is where I spend most of my time, going between the offices in Surrey and Abbotsford, and live in the South Surrey area. Lots of cranes, lots of building going on. Do you see that continuing?
Well, yeah, I mean, I think right now, like we're just off the highs of units under construction. I think at one point, like last year, we had about 40,000 units under construction, which was an all-time high for the Lower Mainland. And so we'll have, I think last year in 2020, we had record home completions. And I think like 2021 will be another strong year for completion. So, because again, like a lot of that product was initially getting constructed in 2015 and 2016 during the last boom. And so a lot of that construction, because of the lag, has obviously been completing over the last, year and into this year and next year. So I do think we have a lot of supply coming to market, and that will probably put a lid a little bit on price appreciation for the condo market. Yeah. And I think that, housing starts, you look at them, they're still quite strong as well. I mean, they've rolled off a little bit, but they're strong.
Yeah. Yeah. All right. So my second point that you had brought up a little while ago, you talked about Yes, prices are high. It's frothy, maybe coming off or taking a bit of a breather. And don't be surprised if you're buying a detached home that in the next little bit, you may get a 10% pullback. So fair to say that when you are talking to clients about the reason for their buying, it had better be long-term, because if you're looking at, and this is how we talk to clients about investment, is what's the purpose of what you're doing? And if it's long-term, then it's an investment, and we look at what it is that we're buying and we make sure that it's a good investment. If it's short-term, then really what you're doing is gambling.
Mm-hmm.
And so fair to say, same analogy in the real estate market right now?
Yeah, I mean, I just think that this pandemic boom has been driven mostly by, I mean, almost all by end users, right? Everybody goes, oh, look at these, speculators. And it's like, trust me, there's not a whole lot of investors buying single family houses for 1.7 million and renting them out for $4,000. Like the numbers just don't work. So, the majority of the strength at the onset was driven by the single family market. It was more just an emotional need that people were spending 90% of their time at home. They wanted more space. And I think that everybody was looking to upsize, and they're just, when you have a whole bunch of people looking to upsize at one time, we just had more demand than we had inventory for sale, and that just pushed the prices up exponentially. And I think, again, it almost creates a little bit of a feedback loop too, because I think at the onset, there's some people thinking, oh, okay, well, prices are going to come down. This is my opportunity. And then as we saw, obviously, these policy measures come out, the housing market took off. People like, wow, like, yeah, I think it just reinforced this idea that, oh, Vancouver real estate's bulletproof. And I'm not saying that it is. But I think that when, we interfere in some of these, quote unquote, free markets, is that, we've already had a 20 plus bull market and everybody was thinking this was going to be the one. And it turned out to be the exact opposite, right? We had CMHC, our government mortgage agency in Canada, coming out and telling everybody prices are going to fall 9 to 18%, which I think at the time was probably a rational forecast, given the underlying, unemployment situation and how scared everybody was. But it turned out to be the exact opposite. If you look at National Home Price Index, as of February, the HPI, which adjusts for the composition of what's selling, national home prices are up 17% year over year.
Wow.
So their forecast was literally the complete opposite. And you have to think, these are the guys that have more data than any of us. They literally know they have the bank's balance sheets. They look at all these mortgages that are, on their books, and they have all these, hired and trained economists, and they were completely wrong. So it becomes difficult, obviously, I always caution people about trying to forecast things, but I've probably deviated from your original question, but I think that it's been largely end user driven out of an emotional needs basis.
No, that's a great explanation, and actually, you led right into one of my last questions for you, and that was it. I think you alluded to almost there the crystal ball. So what I want to ask you is, looking past all this euphoria, what do you see in the next 1 year, 5 year, 10 years? Specifically for the Lower Mainland, let's be a little selfish for those of our listeners and viewers here in Lower Mainland. What do you see?
Yeah, that's a tough one. I think that, so much of it now, right? As well, I think it's like we're seeing like global asset prices basically all kind of follow each other, right? If the stock market sells off, you usually see some weakness in the housing market. And, I think everybody's watching the Fed, right? What are these central banks going to do? And it's, don't fight the Fed kind of thing. I think over the next year, I think it's probably likely that you're going to see yields push a little bit higher. If the mortgage rates go from where they were from 1.5 to now they're at 2.2, let's say they go to 3, I think that you're going to see a pullback in the housing market. But if rates remain subdued, sub 2.5, I think that's bullish for the housing market, just because people are going to be reaching for yield. And so I think that will provide some, but again, I think it really just hinges on what policymakers do, what central banks do, where rates are going to be. My personal opinion of rates is that while I think that we're going to see some inflation over the next 12 months, I personally think it's a little bit more transitory. I just think that we have so much debt, the demographics aren't great, and technology. I just think we're still in a longer term. I think we're in a deflationary environment, and I don't think that anybody has the stomach or the ability to actually meaningfully raise interest rates. So that's my personal opinion. It's so hard to say, right? I mean, everybody's trying to guess inflation, deflation, what's going to happen, and I'm still in the camp that while we'll have inflation in the near term, I still think longer term we're in a deflationary environment.
Yeah, don't disagree. I just did one of our podcasts with Drummond Brodeur and global strategist, and it's one of the things that he talked about is that the drive right now for governments is get inflation going, because inflation doesn't scare them. It's deflation that terrifies them. So they want to get as far away from deflation as possible. But so they won't even attempt to slow things down until they see the inflation being sustained over 2%, as opposed to, and that's by their measurement. Let's face it. We all know that real inflation is much more than that. But whereas their policy used to be, as soon as you started to momentum towards that 2%, they'd put the brakes on. So absolutely agree with you. And to your other point that it's I think you called it transitory, shorter term, because we cannot afford to have high interest rates. Therefore, governments will step in and make sure that they don't get too high, because people just can't afford it. The economy can't afford it at this point, and or more so, they don't have the stomach to do it, as you said. I'll maybe lead into something else. I was actually going to end it there, but what you made me think of is something that I can't remember if it was one of your blogs or a tweet that I read in there. You talked about the haves and have-nots, and you talked about them, the have-nots, particularly younger generation, being priced out of the market, and what a impact this has on them. But it's not just housing market, though. Yes, it is housing market, but it's really hard assets. It's assets that they lack, because you have somebody who rents and earns an income, but doesn't have any investments or any real estate. Their income is not going up at the pace of their assets are going up, and that just creates the divide. So yes, it's housing, but it's more than housing. It's all assets.
Yeah, I think it's just creating like societal frictions, right? I think that again, obviously QE, per the Bank of England, like the intended, not the unintended, the intended consequence of QE is to raise or boost asset prices, right? So obviously it benefits those who have assets, but particularly people that are on the lower income spectrum that don't have assets, or if you're just a younger individual, just getting out of post-secondary or whatever, obviously you don't have a whole lot of assets, so you haven't really benefited from all these policy measures. And I think that it's definitely creating some societal frictions. And I personally think that, again, whether you like it or don't like it, I think that we're going to see a lot more. So you asked me about the outlook for Vancouver housing. I think you're going to see a lot more tax measures, a lot more policy changes to try to offset some of the inequalities that because I just think, well, again, whether you agree with it or disagree with it, I just think that politicians are going to be forced to, because I just think there's so much friction. I'm out there, every day talking to clients and talking to people on social media about housing, and you can just tell there's so much anger as to sort of what's happening. And, even I talk to, clients all the time where, they might be a little bit older, and they've done, made millions off their real estate, but they're looking at it and saying, well, how are my kids and my grandkids ever going to get into the market, without me obviously, gifting them, large sums of money. So I think that they understand that something is not quite right. And so I do think that I think we're going to see a lot more taxation against real estate here to try to rein things in. And I'm not saying that's going to be successful, but they'll try it.
Yep, don't disagree. There's somebody, a couple of things. Somebody's got to pay the bill for all the money that's being spent. And then also, as you say, there's that inequities that have been created or exacerbated by the situation. So, Steve, I'll leave it there. I really appreciate you coming in and speaking with me. Great insight. Really enjoy following your comments and your thought process. Look forward to maybe having a follow-up in a year or so, just to see how those predictions, those crystal balls did for you there.
Yeah. Don't hold me to account. Yeah, no, this was a lot of fun, but definitely open to coming back on. It was any way I can help.
Great. Thanks so much, Steve.
Thanks a lot.
Thanks again, Steve. And looking forward to our next video podcast, we have Glenn Landry, our favorite sleep doctor. For those of you who have been fortunate enough to hear him speak live at our events, we know you'll be excited to see him again in this format. So until then, Asante Sana.
Hi, I'm Trevor Beggs from Sana Family Office, and thanks for listening to John Lawson and the Wealth Wisdom Podcast. Here are the necessary disclosures. Asante Capital Management is a member of the Canadian Investor Protection Fund and Investment Industry Regulatory Organization of Canada. This material is provided for general information and is subject to change without notice. Every effort has been made to compile this material from reliable sources. However, no warranty can be made as to its accuracy or completeness. Before acting on any of the above, please make sure to see a professional advisor for individual financial advice based on your personal circumstances. The opinions expressed here are not necessarily those of Asante Capital Management. Thanks again for listening, and we'll catch you next time on the Wealth Wisdom Podcast.